Basically, Akru tries to solve the investment problem, which is that investment is very complicated. People don't know what funds or what stocks or what ETFs to buy. They are not in a position to make very complicated and complex calculations about how much to save, for example, for their retirement, which is 20 to 30 years away, and also make calculations how much they can actually inflate their current lifestyle into a retirement lifestyle and make that last for 20 to 30 years into their retirement. So what Akru does is to eliminate all that pain point and just basically ask them questions that they know, how old you are, what is your current lifestyle spending when you want to retire and so on, and also what risk you want to take for that investment. We will then spit out a number for you to save, and we will invest accordingly to get you closer and closer to achieving that particular financial goal. And for that, we are charging a very, very cheap fee, which is 0.7% of the investment amount. We feel that we can make money out of this because the invested amounts will stick with us for a very long time, right? People don't, it's not like a consumption where you buy something for 100 ringgit and that's it, right? What people will do is that they will save 100 ringgit every month, and their incomes are increasing, so their savings are likely to increase over the years, and then you will see this exponential growth in the AUM, and that's the AUM which is very sticky, which keeps on growing from year to year, that we charge our very low fee on, which is 0.7% to start off on the invested amount. And that represents, we believe, a very attractive business proposition to everybody. And so we are disrupting the existing landscape, which is that we are making things very much easier. We are adding value in helping customers achieve their financial goals. And we are making the investment product very, very cheap as well. We're taking the pain out of investing. Now, it's also, I think, relevant for you as an investor to know that the market is huge. The unit trust currently is managing, the unit trust market is currently managing about 500 billion ringgit. It's a very inefficient, poor user experience and expensive market. We believe that we're in a position to disrupt that. There are also EPF funds of 1 trillion ringgit, which is up for grabs. There is a lot of idle money to the tune of about 2 trillion ringgit that's being left in the current accounts and savings accounts. So Akru is in a position to mobilize that money. And also we have set our sights on certain other products, like the Sharia product. We're going to market to enterprise as well to make it easy for them to manage their cash. And we have set our sights on a regional expansion as well. So that in a nutshell is the business proposition and what we intend to do over the next 1 year or so. So I now open it up to questions.
Yep, guys. So if you have any questions, please key into the chat, or feel free to unmute yourself and ask Julian and Mr. Tan any questions you have.
Hey, Julian. Hi, Julian. Can you hear me?
Hello? Yep.
Hi.
Hi, I just want to ask a question on the fee. Just now you mentioned 0.7%. That is not including the fund itself will charge probably annual management fee, maybe around somewhere around 1.5%, right?
I'm sorry, I didn't get that question.
Yeah, can you hear me now?
Sorry, is my connection? Yes. What is the one?
Yeah, I'm talking.
Yeah.
Sorry, Mr. Ng, if you could type out your message and then maybe Julian could read that better. So Julian, I think while we wait for Mr. Ng to type out his question, we've got a couple of other questions in the chat. So the first two are quite similar to each other, which is first one's from Michelle, who asks, what's the difference with Stashaway? And Navin, who asks, how is Akru any different from other robo advisors out there, such as Stashaway, Wahid Invest, and MyTheo?
All right, first of all, the thing to note is that the market for unit trust is huge, right? You're talking about $500 billion, $500 billion ringgit, with a more sizable, addressable captive market in the form of ETF and CASA accounts. So I think that the degree of funds that there are in the system is able to support a handful of robo-advisors that are out there. But having said that, Akru as a platform will hold on to certain philosophies. For example, we want to make sure as far as possible we have a globalized product. We want to overcompensate for the fact that Malaysians are actually over-invested in Malaysia. So we will not put a lot of weightings into Malaysia unless it is for a cash management or for a capital preservation kind of goal. The second thing to note is that we will also be committed to the whole low-cost philosophy. So we would make sure as far as possible, we will minimize the usage of unit trusts and use ETFs as much as possible, because the ETF fees are very low. I think 50 to 60 times lower than what you will see in the unit trust. We have a few funds, like one or two funds that use local unit trusts, but again, that is for the purposes of protection against foreign exchange movements and capital preservation for some of the more conservative goals. All right, that's the only reason. Otherwise, we would commit to using the ETFs. The third reason is that we have an element of B2B, which is that we're going to have business models where we would service the enterprises, for example, allow them and their treasury departments to shift money around very easily and quickly and improve basically on the user experience. And also, we are coming up with Sharia products. We are also coming in the pipeline. We are thinking about allowing other financial advisors, human financial advisors, to latch onto our system and use it as a tool to enable them to expand their businesses. So these are some of the differentiating factors that we're looking at. Now, from the personality viewpoint, you can see that our Instagram and our Facebook have in fact gone live as of yesterday, right? We were waiting for most of the bugs to be fixed before going on social media launch. So we are, from a personality viewpoint, we are also moving away from very staid, old investment banking ways of doing things, right? We want to be accessible and we want to speak on behalf of the person on the street. That is from marketing, branding, and personal viewpoint. Basically, we want to put ourselves in a position where we demystify investments, and I think that we can do that very well, given that we have experience in media, given that we also have vast experience in investments.
Okay, fantastic. Thank you for that, Julian. The next question we have over here is what Mr. Ng was trying to ask you earlier. Other than the 0.7% fee, the funds with the portfolio will still carry charges like annual management fee, right?
That is correct, but we are using ETFs. Now, the ETF fees is a few basis points only, right? Our cheapest fund, I think, is 0.03%. That is just 3 basis points. If you look at the unit trust management fee, is 1.5 to 2%. That is 150 to 200 basis points. So the ETFs offer a proposition that is just ridiculously so much cheaper than the management fee of unit trust, which is why even adding on the 0.7% advisory fee onto the management, we are still offering a proposition that is extremely cheap. Now, this advisory fee is actually quite important because when you buy into a unit trust, you have to decide what fund to buy, right? Do you buy into the India fund, the ASEAN fund, the US fund, the global fund? People generally are not in the position to make that kind of decision. So what do, right? They either listen to an agent who usually is not in a position to give a complicated financial planning solution, or they pay for an expensive financial planner, right? When you do that, the unit trust fee hasn't actually accounted for the advisory portion of it, right? Which is a separate fee altogether, which adds on to the fee. So our all-in fee basically is 0.7% plus only the ETF fees. And other than that, we charge a 10 ringgit account opening fee. And this is not because we simply want to make 10 ringgit out of you. Basically, we are a startup, we are conserving cash, which is why we are raising cash on Leet at the moment as well. The 10 ringgit is to pay for other costs like the KYC costs, right? Which can be very expensive for us. So for now, we are charging for account opening 10 ringgit. We did a survey. The feedback was that most people find it not painful at all to pay 10 ringgit to pay that 10 ringgit. We may actually just decide to eliminate that altogether in the future when we raise fundings and when we are more stabilized. So to answer your question, 0.7 is the net fee that you won't find any other hidden cost. Oh, by the way, we also pay for the broking charges, yeah, the trading charges, the custodian charges, and so on and so forth that we absorb. The unit trust actually passes that cost back to you.
Brilliant. So for the next question from Jian Hui, who asks, Ms. Tan and Julian, most robo-advisors are facing the issue of high client acquisition costs. Is Akru going through the same issue as well? And if so, how is Akru dealing with this? And how do you plan on dealing with this in the future?
Chong, you want to take that?
Sure. I think it's well known for most of the startup facing this issue. Spot on. So the way that we plan to deal with it is that first we have to do a lot of digital marketing and do a lot of this social media stuff ourselves, right? So that is one way, and we have Julian, and it's well known. Everybody knows about it. It's always on radio, on magazine interview, right? Publication and all that. So that is a way to promote our product, right? If every time we need to spend a lot of money, get the influencer to do it, that is a huge cost, right? So we will create our own social media content to deal with that. So the other part of it is to work with a group of people or companies that have a lot of larger customer base, right? So working with the likes of e-wallets or telcos, or those people have that. And recently, ST gave up a new license to allow this company to be able to work together with us. So that is very interesting, right? So that has become another distribution channel, right? Today it's not widely done yet, but I think going forward that will be the way to distribute financial products, right? So I think maybe just to give you that is the big one, like e-wallet. There are millions of customers, but we also target people from a smaller group of customer base. I'll give you one example, right? This very interesting school management app, right? They have 600,000 users, parents and students, right? I mean, it's something that you never heard of, right? Unless you're one of the parents, right? But it's a good enough base for us to work with to get some customers, right? But that kind of collaboration is, I guess, is very different from pay for acquisitions, right? So those are the few ways that we are targeting. We have in mind to deal with the acquisition costs. Yeah.
All right, fantastic. So I think before going on to the next questions, in line with what you had said about the partnerships, Michelle is asking if you have secured any partnerships that you mentioned earlier.
Well, currently we have 2 small ones. The rest are in discussion.
If I might add on something to that as well, we also have to look at this in the light of the degree of funds that the fund management industry has managed to garner, which is, as I mentioned earlier, R500 billion. So if we are going to disrupt and have a better user experience and a cheaper, like much cheaper model, I think naturally the demand would be there. So people there will be a trickle down effect where people will come to us. That's number one. The other point is that if you look at a platform like Fund Supermart, right? They also would have acquisition costs, but they have been around for more than 10 years already. And they took that amount of time to hit a certain AUM. So we are saying that we will be able to hit the kind of AUM that Fund Supermart has hit, but in a much shorter time because we are living in a world where people are more open to adoption of online models. We are seeing a whole generation of people that is not shy, right, just to get online to do all sorts of financial transactions, including investing. So I think us, as well as a handful of robo-advisors, will be able to benefit from that as well. And at the end of the day, everything boils down to an acquisition cost, right? Which is anywhere between, I've heard of 1 ringgit. Like some people tell me, oh, they acquire their customers for 1 ringgit. I don't quite believe it, but that acquisition cost is anywhere between 1 ringgit to 100 ringgit to 1,000 ringgit in certain markets, right? US market, Australian market, or whatever. So we are, it's a balance to actually make it work. That's why I think Chong Leong is saying that as a start, we need cheap acquisition models like social media and so on to generate that interest and generate that traffic. Yeah, so I think we got a few things going for us there in terms of the huge amount of money that's in the industry, as well as our social media and digital marketing activities, as well as working with all these affiliates which control a large user base.
All right, brilliant.
Okay, so Kenny's questions on the burn rate, right? Okay, so it's correct that that is the, if you calculate backwards, you probably get it right. That is about the break-even point, right? To get to about 200 million AUM. And I believe if you look at other business, this is a very low-cost business. The way that we run the business, currently we only have 4 people, and we do a lot of things ourselves, right? That is to conserve cash, right? So the question is, if we can raise 2 million ringgit, so we probably do not need to raise, unless, I mean, if we have funding, maybe the way that we expand the business, acquire business, or even go to regional, that's a different thing, right? So based on our plan, that we probably need about 2 million for now, right? Now, we also understand the uncertainty of business, right? So the acquisitions, but how much it costs us to do it. Of course, we have some budget for it, right? Hopefully, we don't need, with the 2 million capital, if we can raise, then we don't need to raise any more capital unless we want to expand our business to other line or going into regional. So I guess that's the answer.
Okay, great. Yeah, so I think that answers Kenny's question. The next question was from Shashi, who asked, will you stay in Malaysia or do you have any plans to expand elsewhere? Since you're also not a first mover in the robo-advisor space, how are you going to attract new users? Or how are you going to attract the users of other robo-advisors like Stashaway and MyFew, etc.?
Julian, you want to?
We are rest assured that our primary focus is not trained on Stashaway's customers. I think the market is much bigger than that. So unless they start monopolizing everything, I don't think that's going to happen, right? It's hard to monopolize the market. So I don't think we want to spend unnecessary marketing efforts to just shoot friendly fires to Stashaway. You know, it takes up a lot of resources for that. I think what we want to focus on is to go out there and brand ourselves as the people who know about not just investments, but all aspects of financial planning, financial management, financial literacy as well. And having done that, basically go out there to get the business, you know, from the traffic, to convert the traffic that comes on to our platform, convert that into actual revenue. Yeah, so we are here to disrupt the old way of doing things. We are not here to disrupt Stashaway, by the way. We are here to disrupt the unit trust industry. We're here to disrupt unfair and expensive banking practices. You know, the same way that, let's say, Uber and Grab have disrupted taxi. AirAsia have disrupted the old airlines. I mean, now COVID, of course, that business is out of model. Airbnb is disrupting the hotels, for example, right? That's what we are trying to do here.
Yeah, just add a little bit on that, right? So we are talking about $500 billion unit trust industry. So the question is, can we get even 0.5% of that to become our customers? And bear in mind that market is actually growing because everybody, the saving rates in Asia is very high, right? So a lot of people earn a living, make income, then they save. So, but where do they put the money is the question, right? So in unit trust industry be growing like 6-7%, right? So investment industry itself is growing. Then the question is for us, our new player altogether. I mean, we are friendly, right? We know each other. So can we offer something to the market that is more beneficial to them, right? At a cheaper rate, and they don't have to take their worry out of their mind, right? So we invest for them. Don't want to be caught by some consultant or something, right? So that is what we are offering. So not so much of competing with the others. We really look at what the opportunity out there is so huge. Can we together, you know, to take some of that, to move them to robo-advisors? So maybe I just move on to the next question about valuation.
Yep, please.
Well, so what we have done, Julia and I started this 3 years ago, right? We spent a lot of time, a lot of effort, talking to a lot of people and regulator. Eventually, we got the license and we launched it, right? We developed the system. So we have the license, with the system, with the team, with good advisors. So that is what we have built in the last 3 years. Right? So on the quantitative side, when you look at valuation, right? Typically, there are two ways to look at this for startup. One is on the DCF basis, one on the comparables basis, right? On the DCF basis, we all know that as investors, I mean, I myself is an investor in startup, right? Fintech, e-commerce. The projections, the management team, usually the investing company come up with the projections, right? Based on their best judgment, right? So there's still a lot of uncertainty towards that. So based on our projections, so we are looking at, we try to get something like a 3 billion AUM in 5 years' time, right? So big picture. So that is about half a point of unit trust industry today. So that just to give you a sense of the relative size, right? If we can build a company that size in 5 years' time, that will worth something like 300-400 million based on certain benchmark right? That is done in US and Europe, right? So that's the high valuation in the future. But of course, if you DCF it to today, that worth, maybe 50-70 million, right? But what we are asking today is about 11 million pre-money valuation, right? It's a fraction of that. I guess as investor, you want to have the upside, potential upside. That's why the valuation is this way, right? Then the question for investor is that, is it a high valuation? The other thing you look at is, so okay, don't look at US, right? Look at Malaysia. What are the startup? I mean, in the pack, we put up some comparables, right? And some of those transactions were done like 3-4 years ago. And some of them, I myself is an investor there also, right? They are very early stage without license or just got into sandbox or something, right? So at that stage, that kind of valuation we're looking at. So, I mean, you take that into account and compare to what we already have, right? So 11 million pre-money valuation is not a big ask, right? I mean, some people actually ask it, then why is it so low? Somebody asked me, right? So I think from our point of view is that the whole purpose is we want more people to participate in this business, either as investor or customers. It's not about for us to ask for huge valuation, right? And then try to make people to pay us a lot of money. But that's not the idea, right? I think we want to do this is because we think that this is something very good for people. We want people to join us as investor or customers. So that's the reason why we came up with a valuation that way.
Okay, so the next question, so Navin is asking, how will you be holding investors' funds or cash? And will you be utilizing a trustee account to hold the funds or the cash?
Sorry, I don't understand this question.
I think it's a question about the custodian. All the cash
Can we
custodian.
confirm with whoever asked that question? Are you referring to the ECF funds or the investment funds? Who asked that question?
Navin. Yeah, I think it's referring to the investment fund into Akru. Yeah.
Okay, the investment funds. This is very simple because these are all regulation. Yeah, so all the money that goes in will go into a custodian account. It doesn't go into a Akru's account, and the custodian is acting on your behalf, or rather the investor's behalf. And Akru can only instruct the custodian, can only have the right to manage the funds because our license will deem us a full-fledged fund manager, right? It's the same as unit trust, it's the same as other asset managers. So we are full-fledged fund managers. We have the right to instruct the custodian and manage the funds according to regulated permitted activity. We cannot use the funds to buy ourselves a car or expensive watch or anything like that. So that's in a custodian account. And if Akru, touch wood, goes belly up and have to close down or something, those funds will still be in the custodian account and will be returned to all investors. The current value of those funds will be returned to their respective owners. Hope that answers that question. And gives you some sense of comfort as well, because this is a very important point, actually.
Great. Yep. So the next question is from Kenny, who asks, how are you going to plug the funding gap between the current ECF funds of about 600K to 2 million? Will your
Okay.
budget mitigation plan be shared with the ECF investors after the campaign closes? He basically just wants to know whether your plans to keep the companies, what are your plans to keep the company solvent and not to go belly up?
Okay. First, I want to mention that there's a requirement of 2 million shareholders fund at all time. There is a regulatory requirement. So whatever happens, there will be 2 million there in the company, right? So what we have today is together with a co-investment by the government, MySIF, right? So we probably have about R1 million, right? We have raised about R1 million, right? In the platform, is showing 618 just now, right? So with MySIF, then we will be closing to at least 1 or 1 plus, right? Because there are other people talking to us. That's the minimum that we can confidently say that we will exceed about 1 million or more. So what happens if we don't raise 2, right? Of course, first of all is we have to find ways to run the business in a very cost-effective way, right? Secondly is we may have to go back to market to talk to other people. And some of the investors that we spoke to recently, so it's the appetite issue, right? They still feel that we are too early. So they prefer something that they don't mind pay a bit higher valuation, they rather come in slightly later. So I think there are quite a number of investors with that kind of appetite. So I think there are enough money, liquidity in the market for investors to put money in this kind of business. So I don't see that 1 year later, if we go back to the market, if you have to, I hope we don't have to, go to market is not an issue to raise further capital.
Okay, so I think that ties in with Michelle's next question, who asks, when do you plan on raising your next round, and how much or for what reason?
Okay, it may be no plans, because if we have enough capital, then we can build the business until break even, right? If we have to, there are a few reasons that come to my mind, right? One is because we want to expedite the acquisitions, so we need to fund the acquisitions. The other reason could be strategic reason. So we want to have an investor that can work with us that really help the business. It's not just about capital, right? It's about expanding the business. Or we want to go regional, because in our plan today, we haven't built in the regional part of it, right? So we want to build up the Malaysian part, so we have the strong footing, then we think about go regional. So those are the reasons that we may go and raise capital.
Okay, so Kenny asks next, then referring to the requirements of the 2 million shareholders funds that you guys had mentioned earlier. The 2 million shareholders funds are reserved to repay Akru account holders for the AUM and not for any other purposes, right? And how will this build confidence?
No, that is incorrect. That's not correct. The 2 million fund is not part of the investor, the savers funds. The savers funds go directly to the accounts, and if in the unfortunate event that we go belly up, the savers investments will be funded by their own investment, which is in their custodian account. The 2 million is just a regulatory capital that belongs to Akru. It doesn't belong to the savers.
Okay, great. And so I think the next question was then, how will this build confidence that the company won't go belly up if it's merely a backup when the company goes bankrupt?
No, so just to be clear about this, the shareholder investment is a limited liability investment. Yeah, you got to take risk on it. It's very different from the saving investments, which is not guaranteed, by the way, also. So you take your own risk. But what I'm saying is that that money is protected because it's in the custodian, and this is a regulatory requirement, right? It's like unit trust. If you invested 1,000, the unit trust company does not have legal ownership over that 1,000. You own that 1,000 legally through a custodian. So they are acting on your behalf. Hope that clarifies.
Yeah, I think that's pretty clear. Thanks, Julian. And then John Hui asks, besides the EPF and PRS, you mentioned that insurance companies is also another potential strategic partner. What is the plans and how are you going to engage these insurance companies?
Tonga, you want to take that? You're the insurance guy.
Okay, what we have in mind is that investment and insurance are a very important part of financial planning. Right? You plan your life. This, of course, later it will be real estate and other things will come in, right? But the most important part, the two parts, is insurance and investment, right? So we start the business, we call it robo-advisor, we focus on investment. So the next thing, hopefully not too long, that we will be working on is to work with an insurance company that offer protection and insurance at the same time, right? Now, in the market today, about 1 million life insurance policy issue each year. That's before MCO, right? And 2/3 of them are actually investment-linked product. Actually, investment-linked product they are very expensive product to get protection. At the same time, they give you investment, right? But it's a very expensive way to invest. You can see a lot of life insurance agent drive BMW and Merc, then you know why, right? Because there's a lot of commission involved. So the best way for the consumer is to buy the protection and the investment separately. Not separately, I mean together, but in a cost-effective way. So as you know already, robo-advisor is a very cost-effective way of doing it. The other side, if we can offer something working with an insurance company to offer only protection, and you know, only protection actually doesn't cost that much, especially for young people. So you combine the two, there is a very beautiful product that we can offer in the future. So that is, of course, we are new, we are young, right? So that will come, right? So that is kind of things that we have in mind.
Yeah, just to add to that, because I personally have also done a lot of research into insurance, mainly driven by my own demand. I just wanted to source out the best deals that are out there. And in the process of that research, actually just to give you an idea of how expensive the current insurance policies are, if you bought 100,000 ringgit coverage through an agent, right? Roughly speaking, if you're 20-something to 30-something, your insurance premium per month would be 100 ringgit, all right? Now, for the same 100 ringgit budget, if you go to some of the online insurance models right now that are just selling pure protection policies, that 100 ringgit will actually buy you a 1 million coverage. All right, it makes, from an advisory viewpoint, because we are financial advisors as well, right? From an advisory viewpoint, this is so important because if something happens to you, you would want that 1 million coverage, right? You wouldn't want 100,000 coverage, but the 100,000 coverage from the existing policies is to fix your premium. That means from your 25 till your 55, you will pay $100 every month. Whereas in the pure protection policy, it increases from 100 ringgit to, I'm pulling numbers out of thin air here, from 100 ringgit, maybe when you're age 55, it will cost you 1,000 ringgit a month, something like that, right? So our role as investment managers is to invest for you like you would plan for any other thing in your life, like retirement. Retirement is all about increasing lifestyle costs. So that jump from 100 ringgit to 1,000 ringgit in your premiums is actually an inflation that we are planning for you. You can separately pay 100 ringgit for that insurance and then invest on your own just to take care of future rises in your insurance premium. In our website, it's just going to be another goal, all right? And we're going to get very, very creative with the kinds of goals that we can present to the market, right? That insurance savings is one goal. We don't even need to have an insurance product behind that. Obviously, it would be awesome to have an insurance product behind that, and anyone who wants to do, any insurance companies who want to do business with us, we will welcome, right? But we don't even need an insurance product behind that, because what we are saying to you is you just invest for future rises in your costs, right? We give you peace of mind because you have invested. So there will be other goals that are coming onto the market, and we will crack our heads so that we make the platform very awesome to people so that they can have financial clarity in their life.
Okay, great. So the next question then is from Marcus, who wants to know, firstly, your marketing plan, and secondly, how long it'll take to break even, or how much funds do we need to manage to break even?
Julian, want to take the first part? I'll take the second.
I think the marketing plan, as we have answered earlier, basically in summary, we are saying that we will focus on both organic and acquired customers, right? Organic growth and acquired growth. With the organic side, we're going to look into ways of exploiting and capitalizing on social media. Our branding would be to demystify investing, and so that we can provide more bang for the marketing buck in terms of our Instagram, Facebook, and perhaps a YouTube channel, perhaps a podcast. We would use that kind of thing. In terms of the acquired growth in customer traffic, we would go with affiliations and partnerships or with owners of large user bases. And that probably will boil down to a direct payment of the acquisition cost or a revenue split. You know, there are many platforms today that actually want to do business with you just to make the particular platform, for example, e-wallets and so on, right? Who want to make their platforms more complete. So they're really very open to doing business with us. But there is no free lunch, right? We still have to pay for those things. So we will really put all these options on the table to see which is the most cost-effective option for us. But you know, at a very foundational level, we are saying that there would be huge trickle-down effects from the existing very inefficient, expensive, and just lousy user experience in the existing investment landscape, right? Our accessibility would, I think, at a foundational level, be marketing itself, right? We will actually go out there and say how bad the old system is and how much of a paradigm shift robo-advisory is.
Great. Yeah, I think Marcus had asked that because he joined us a bit late, so that's why he wanted to know what the.
Oh, I see. Okay. Yeah.
Yeah. And so then the next question is from Shashi, who asks, don't you think it'll be a bit too late if you're going to regional users a bit late? So I think he's talking about the plan you're talking about earlier about going into regional customers after local customers. So Shashi wants to know if you think it's a bit too late to go for regional users if you don't focus on them right now from the start.
Okay, I'll take this question, but after that, Chong Leong, I think you got to address Marcus's second question about break even.
Yeah.
I don't think it's too late at all. Not many people know about robo-advisory, you know, so we are at that point right now where actually it's kind of like Uber and Grab before people started adopting ride sharing, but it's actually not late at all. There's no robo-advisors in Indonesia or Thailand. I don't think there are, or Philippines. So if we went to those places, the regulatory environment must be conducive to us as well, because we just can't go there and open shop there. We've got to go through the hoops of actually getting the license to operate there, and then we got to navigate all the local laws there are. But definitely our product is ready to be plug and play right into the region. And I would say it's a perfect product because we have no minimum investment, right? What is 1 ringgit in Malaysia could be 1 rupiah or 10 rupiah in Indonesia. I can guarantee you we have no problem putting 10 rupiah. I don't know what that amount is, maybe a few cents, right? But I can guarantee you that we can put 10 rupiah into a globalized portfolios. And that 10 rupiah is not put into a unit trust. It's actually in a portfolio that is owned by that particular saver, right? So because we have written the algorithms for that, we are in a position to replicate that in the other regions and accounting for those regional purchasing powers as well.
Just to add a little bit, right? ASEAN have 600 million population, and it's a very young population, growing middle class, very high saving rate, right? So those are the factor, and investment industry is growing, right? Even developed countries, even investment is growing, right? So it's never too late. I think if we can do it, expand it to the region, that is a very good time to do this. Yeah.
Okay,
going back.
Just to add to that, Chong Yong, you raised a good point about the high saving rates in the developing countries. But do you know that in developed markets, let's say the US market, yeah, the US market, the market capitalization, I think, is like maybe just slightly over a few times of their GDP, and their GDP is about $20 trillion, right? The US market cap. The ETF market is round about 1/4 of that market capitalization, all right? And I think the robo-advisory market could be maybe about 1/3 of the ETF market, of the overall ETF market capitalization in the US, right? We're talking about trillions. I mean, it doesn't really matter what the numbers are, they are huge. And even in a developed market, the numbers are already so huge, you know, because developed markets are developed, right? But there is this huge shift from unit trust, firstly from unit trust into exchange traded products, and from exchange traded products into basically robo-advisors. Just the bottom line, what I'm saying is that actually the potential is huge, whether you're in a developed market or a developing market.
Okay, so the next question that Marcus has.
Sorry, I had to go back. Marcus, second question, right?
Yeah.
Okay, before we talk about break even, I think we talked a little bit about how do we manage the business so far. It's actually very low cost, right? Even going forward, we want the people, right, to be very productive. And then in terms of compensation, actually we manage it by giving up share to the management. So not cash. So in a way, that will help us to manage the business very well, right? Because if we are a startup,
cash, not zero cash.
Yeah. Some cash, very little cash, right? So if you look at some other players, they hire very expensive expat, and you know the cost is not going to be cheap, right? So for them to break even, right? From what I heard, unofficially, probably 10 times of what we're talking about here. Right? So that, I mean, you're an investor, you're looking as a business, you want the business to make profit, right? In long term, sustainable, right? So this is how we have structured the cost that way, right? So you say, how long it take to get there? We hope to get there in, like 2 years' time, right? But business is business, just be frank about it, right? So it may take longer, we hope we can get faster, right? So we just need to manage that, right? Looking at the cost, look at how we run the business, how to do partnership in a cheap way, do all the social digital marketing ourselves in a cost-effective way, So we have to look at all that, right?
I think I would have to renegotiate my salary with the company. is too low. I want to get this under 10 times more salary from that was paid to the expats.
All right, fantastic. So then the next question that we have is from Marcus, who asks, will Akru partner with local unit trusts and invest in local instead of investing in US markets only?
Okay, just to be technical about it, we don't just invest in the US market, we invest in the global market, but the United States has the highest allocation by virtue of their contribution to the global GDP. Our portfolios are fashioned along the global allocations. About partnerships with the local unit trust industry, maybe is the answer that I would say. We would never willingly allocate into any unit trust, because they're too expensive. They don't really fit into our business model. Our algorithms kind of reject them, the unit trust, just simply because that there's lack of APIs. It's not directly connected to the brokers. The fees are expensive. So actually buying ETFs, even local ETFs, right, is one step more efficient than buying directly into the unit trust. Okay, but if the unit trust company wants to actually have a sort of a foothold or a toehold into robo-advisory, then we welcome them. We wouldn't say no to that. But I think that at the moment is very challenging because the unit trust companies today have a huge agency base. Right now, we have to ask them this question: what are they going to do? I mean, as a business proposition for them, not to us, but to them, right? How is the agency force going to feel if they themselves are going to advisory? That means they're cannibalizing their agency business, and that is very sensitive for them in the short term. But if they see that the writing is on the wall, they might not have a choice for that.
Okay, so Kenny also has another question. In regards to investment terms itself, 5 additional shares for 1,000 ringgit AUM as account holders with Akru. So effectively, the shares would be allotted in about 1.5 years of the closing of this ECF campaign. How does an ECF investor go about claiming this?
Okay, Kenny, you got it right. So it's 1.5 years later, then we'll know how many shares we allocate. So 1.5 years later, we will look at the list of investors, right? With Leet 1337 nominee. So we look at the list and compare to your holding with us. Then from there, we'll know whether you have invested with us for a year. If you have, then we will calculate the number of shares and give it to you. You don't have to claim. We will do the job.
Okay, just to add to that, because Kenny has also posed a question to Leet Capital about how an ECF investor keeps track of the number of shares that they own in Akru. So once you make an investment into a campaign, for example, Akru, this will be reflected in your dashboard and it will show exactly how many shares you own and how many lots of shares you own. And we also will have this in our nominee structure, so we'll know exactly who owns how much of each company. So I hope that answers your question, Kenny. And the next question we have from Shasi is targeted market users age. If young cash invested is limited, marketing will be based on social media. If older generation, then we just stay with the conventional way towards their retirement. So I think he's talking about your approach towards targeting investors, and if we could just talk about how you're going to target the older and younger investors differently.
Very good question. Very good question. I must say that today's questions are one of the best. Very good questions, actually. Okay, the target, we are not doing a sprint, yeah? We are doing a marathon. So it's for the very long term. And AUM is something that sticks with you. Okay, if you look at the trajectory of the unit trust industry, right, it has never, I don't think it has ever become negative growth on any year. Even if the market comes down, right, the amount of funds going into the unit trust, the decline is due to the market, it's not because people on block pull their funds out, which is why the unit trust market is 500 billion right now and counting. And then the EPF, like EPF has a huge problem because they don't know where to invest their money, right? The 1 trillion fund right now, where do you invest it? The Malaysian market almost fully invested already, right? So that is a huge problem. Now, bringing it back to our marketing strategy, the reason to target the younger users, especially the graduates and so on, who have income status, right? And even if you're not a graduate, I think Malaysia's definition of a middle income household, M40, is somewhere between 5 to 7,000 ringgit, right? And a big part, like 40% of the Malaysian population, falls into that group. So two answers to your question. One is we are playing the long game. The young users would grow up and their income capacity would grow. And secondly, the middle class market is also big enough. The M40 market is also big enough. Even if you go to the T20 market, right? The T20 market is like 5-figure monthly household income, like 12 to 15,000 or something like that. Now that market, that it doesn't mean that they are billionaires, you know, or they are ultra high net worth individuals. Even what is defined as the T20 market has got investment needs. They need somebody to manage their investments, because if they earn 10,000, 12,000 a month, the bulk of it goes to their expenses, and they still need to manage that, let's say 1 or 2,000 ringgit savings, right? That is not easy, you know? That is not easy for any of the existing investment platforms right now to manage, right? The unit trust is inefficient. The insurance investment link policies, very inefficient. With robo-advisors, the T20 group, the M40 group, and even I dare say the B40 group will be able to have some kind of clarity as to how their money is being managed. Because all you're doing is you are becoming your own fund manager. You're saying to yourself, I'm starting this goal for retirement. I'm starting this other goal for my children's education. I'm starting this other goal for managing my parents' income, for example. I want to pay my parents 500 ringgit a month, and this is the pot of money that I'm putting into that goal. And others, right? Like saving for property and so on and so forth. It's very powerful. It's a paradigm shift in how people are going to look at their own investments. It's no longer about like complicated stuff and something that is in a language that you don't understand, you know. So I hope that answered your question.
Yeah, that's a very comprehensive answer. Thanks, Julian. John here has another question who says, hi, do you agree that a good product is the most important thing for a startup like Akru? How will you ensure your product is good and competent? Do you have a good engineering team at the moment?
Yes, we do. We outsource a lot of our service. Our digital marketing is outsourced. Our tech currently is outsourced. We speak to our hired investment advisors on an extremely regular basis, and this allows us to keep us lean. But if the money comes in, the 2 million comes in, we are actually in a position to hire engineers, right? Because establishing your own in-house tech team actually is very expensive. So we are looking at all kinds of proposals to actually make that cost efficient. One of the proposals that we're looking at right now is the so-called BOT, right? The Bill Operate Transfer, that is being proposed by 1 or 2 tech developers in town, right? And the concept behind this BOT is this: if you set up your own investment department, you actually got to hire more tech staff than you actually need. And the reason is that if 1 or 2 of them quits, then the redundancy actually kicks in and takes over, right? You gotta make sure that you're basically hiring more people, factoring in redundancies for people quitting unexpectedly, right? And that makes your tech department more expensive. But if an actual tech company, right, a software company does that for you, there are many, many advantages to that. You don't have to price in efficiencies. they are in a position to interview, right? And they know talent, they are in a position to manage the resources. They also will be able to be like, be there 24/7 for any problems that you have. Otherwise, to set it up yourself will be extremely expensive. So we are looking at this kind of proposal, but actually, any startup and any online business, any tech company would want to put themselves in a tech neutral situation, right? We wouldn't do anything to shoot ourselves in the foot, right? We must make sure that the platform is working well, and we have in the plans to also develop an app, right? Because we find that definitely a lot of the young people right now, they use the app, so we try to develop that. But we definitely don't want to lose out on the tech game. We would have people and expertise to handle that for us. Oh, just to cap off the BOT, right? So how it works is that after a few years, the tech company actually then is the T, right? The T of the BOT. They transfer the tech team to you, and the tech team is fully equipped on all your needs, right? They know you inside out already.
Just to add a bit on the good product. I think there are other element of other than tech is the UI UX, is the design, the other aspect of it. So it's not just tech. So we have I think we have very good marketing, digital marketing people who came up with the design, and I think we have good team to run through it to make sure the UI UX is good, and that is good product, right?
Okay, fantastic. So we have another question for Leet Capital, but if anyone else has any more questions for Akru, please put them in. So can you just ask, basically, what you mentioned was the shares that ECF investors get from ECF campaign. How does the ECF investor check, or what proof that he has to show that the number of shares he owned after the additional shares is allotted? So can I just clarify that you mean, how do you know whether you're going to get the extra 5 shares?
I think he's asking whether he need to show proof. Right? I think Akru will do the calculation because we know how much you owe, right? We'll tell you how many shares you're entitled. Then we'll issue it to 1337 nominee.
It's quite easy to write an algo on that, on Akru's part. So you don't have to worry about that part.
Yep, and this will then also be reflected in your Leet Capital account. So the dashboard is where you can see all the shares that you hold in every single company. And this is where you can track the amount of shares that you have. Once the new 5 shares for each 1,000 ringgit AUM you have is allotted to you, we will reflect that accordingly in your account as well, so that you know that you legally own these number of shares. Perhaps, Kenny, you have more questions for Leet Capital. You can always just reach out to us via phone. I'll be happy to have a long conversation with you over that as well. Okay, fantastic. If we have any more questions from the crowd, otherwise I think that's all from us for today.
Yeah, actually, I want to just go back to this good product. I'm quite excited about that, Jen Hui, and thanks for asking the question. Actually, we are every day talking to each other about products, right? Because we are very excited about how the investment landscape today is broken. We want to fix that brokenness, okay? And to fix that brokenness, we are thinking of everything. Now, if you look at our retirement goal, which is something that I'm actually very proud of, the retirement goal actually answers a very, very complex question, which is that how do I project my current lifestyle costs into 20, 30 years later of the pot of funds that I have to save up for? And then how do I make sure that after 20 years, while I'm in retirement, for this pot of funds to last for another 20, 30 years in my retirement? And how do I bring this back to today's terms as to how much to save, right? We have even gone one step further in asking what happens if I factored the ETF, my ETF funds growth into my retirement calculations, retirement savings calculations. We have done that, right? We have done that for you. If you go to our platform and you look at the retirement goal, actually it's quite a comprehensive goal. At the end of it, we will tell you, like, when you retire, you kind of have this much funds from your investments with Akru, and then your EPF funds would be this much. You will be able to spend the equivalent of what you have specified as lifestyle costs in today's money. Now, then we think about other pain points in your financial life, right? What are some of the other painful points? For example, if some of you are already retired, let's say you have $2 to $3 million you have saved up. Then you ask that painful question: how much of that two to $3 million can I spend a month? And in the meantime, how is that money invested, right? The money that is not spent invested. And what if I want to leave behind, let's say for my estate, out of that 2 million, I want to leave behind $500,000 or 100,000. How much can I then spend? And what happens if the market goes up and down? How do you sort of predict that to give me a reasonable amount to spend monthly so that you don't play God on my purchasing power, right? So these are the things that we think about. And then just now we mentioned the insurance policy thing, right? You can link an insurance policy, any insurance policy, to an investment, right? Even in your medical policy, right? So the medical policy and the life policy, actually, if you take a pure protection policy, the future years inflation is very high. But that's the same with any other product, like your iPhone and your TV and your car and all that, right? The inflation rate is actually kind of the same. But with insurance, it's just they make the things so complex today that they think that the best product out there is an investment-linked product. Actually, it's not, you know. The best product out there is a pure protection product. Then whatever independent decisions you want to make on your investments, it's up to you. It's independent, you see. You control that money. You don't have to pay commissions to manage that money, all right? And you use that pot of funds that you have saved to pay for your future needs. That accounts for inflation, right? Maintain your lifestyle or even upgrade your lifestyle and so on and so forth. Now, the challenge for us to fulfill a definition of what you call a good product, right, is really how we can make all these products less and less complex to the people. Like the one, it's like a no-brainer. The moment they go inside, they know what's happening. They don't have to think about the complexities of how investment-linked policies work, how an income goal works, and how the retirement works. They just go in there, like Grab, you know, it takes you from point A to point B. They know exactly what's happening. So that's our challenge, and we want to make sure that by working with the digital marketing strategists, we know how to do this and to make it easier for people.
I think the last question we have here is for Leet Capital from Sang-Hua, who asks, as an investor on the platform, we may invest in various companies, but in the event of someone passing away, how will it come about? Yeah, so I think it's basically as per the intestacy laws of the country. So as you may know, Malaysia has intestacy laws that deal with wills and inheritance and stuff like that. So it'll be all based according to the law. If you have a will, then it'll be according to your will, of course. And if it isn't, then it'll be according to the Wills Act of 1959 and also the Distribution Act of 1958, if I'm not mistaken. So, you know, it'll be all done in accordance with the law or accordance to your will. And for Julia and Mr. Tan, I think they have the same question for you guys. How would you deal with an issue like that?
So I mean, you will be follow the same way because there's a law, right? So you have we have executor, appointed executor. Then they present to us. We will pass on the asset to the executor. So
no,
it will be the same way.
I think the question is about how a crew will be run if one of us dies. If one of us kicks the bucket, How will Akru be run?
Oh, I see. I thought you were asking about the beneficiary question.
Yeah, sorry, I took that as well.
Is
Is the beneficiary question is answered already. Okay, let me take that, yeah.
okay.
I have written out all the algos. Yeah. The how the company manages the funds and the asset allocation and all that, right? That is a done deal because today you have investment advisors, you can hire a new CIO, and the algos have been written. So even if I go, it's there, it's there. And if Chong Leong goes or I go, all that is needed to do is to hire somebody new to take over the business. The business and the branding, I think, will continue. It shouldn't be, I mean, of course, it will be a loss, right? It will be a loss, and the business will hit a challenge at that point in time. But I feel that over the long term, all these qualities have been baked into our company policies. It would not die down just like that, right? The new guy would have no problem to just pick it up, take a look at our SOPs, take a look at whoever it is, the new CTO or whatever, take a look at the coding, and then they would be able to run business as usual.
Okay, fantastic. On that very morbid note, I don't think we have any questions now.
No worries, I'm not pantang.
Yep, so I think that's about it from the questions for today. So, yeah, thank you very much for your time, guys. Julian, Mr. Ng, and Ms. Tan, and also everyone else who joined us today. Really
Thanks,
appreciate you guys taking off your lunch hour to join us today. Yeah, Julian and Mr. Tan, if you guys have any closing remarks, please feel free to make them.
I just want to say that if we hope that you will join us, become our investors, and let us work together to offer something fantastic for the market. Thank you for joining us today.
I'm echoing Chong Leong. Help us achieve our dreams and help us also to make you get good returns. We need the funding right now.
Right, brilliant. Yeah, thank you so much for your time once again, guys, and have a fantastic day ahead.
Thank you.
Thank you. Bye.